Hello and welcome to your Dougherty County Schools Employee Benefits Open Enrollment Guide. Employee benefits are a vital part of most people's overall financial planning. Insurance helps protect things we aren't able to afford to pay for when something unplanned happens. The group benefits that are offered to you in Dougherty County Schools are among the most affordable and easiest ways to purchase protection against major risks that we all face. As we go through this presentation, consider your situation and where any gaps may be present. And as always, you can access this information in your Employee Benefits Center at mydoughtertybenefits.com. There are 4 critical areas most people should be thinking about when electing their benefits coverage. The first and most essential benefit to have is health insurance. Fortunately for you, the state of Georgia offers high-quality, affordable plans. Go to mydoughtertybenefits.com for more information on these options. The second important area is protecting your income through disability insurance. Losing an income for even a short amount of time can devastate many people and families, and it's vital to protect against this risk. Your disability insurance is divided into 2 parts: short-term and long-term. Short-term disability begins after 15 calendar days or the exhaustion of your sick leave, whichever is greater, and will pay for up to 3 months for a qualifying injury or sickness, while long-term disability will begin after the greater of 90 days or the exhaustion of sick leave and pay to Social Security normal retirement age. Depending on how much sick leave and savings you have or don't have, you may need to have both short and long-term disability. But long-term disability insurance is highly recommended to most people who have under 25 years of service and are under the age of 65. The third most important benefit is life insurance. Think you don't need life insurance? Think again. It may seem like an unnecessary expense, but there are many reasons to have life insurance, even if you're not supporting a family. For instance, final expenses. You've seen the commercials. Funeral expenses, debts, medical bills can add up to a hefty amount. The last thing you want is for your loved ones to shoulder this extra burden. Also consider that if you're married, you and your significant other may have planned for a future based on 2 incomes. But what if one of you passes away unexpectedly? Life insurance can be used to replace the lost income so the survivor can maintain the same standard of living, maybe even pass on an estate. There are 2 types of life insurance: term and permanent. Term insurance is usually the most affordable early in life, but the price increases as you get older. It's meant to provide higher death benefit needs during younger ages when you have higher financial obligations. Your voluntary group term life, accidental death, and dismemberment insurance allows you the opportunity to purchase up to 5 times your annual salary, up to $200,000. Eligible spouses and children may also have coverage if you elect coverage on yourself. It's important to note, each year you and your spouse will be given the opportunity to increase your life and accidental death and dismemberment coverage. If you're already enrolled in the plan at any level, you can purchase additional amounts up to the guarantee issue limits without answering health questions. If you're not currently enrolled, any election will require a medical questionnaire. So consider enrolling in this coverage, even if for a small amount. Permanent life insurance is generally more expensive today, but is designed for you to have the rest of your life. It should typically be used when you have permanent or long-term financial obligations, like final expenses, that you desire to cover elsewhere with insurance. Unlike your term insurance, it comes with guaranteed level premiums and death benefits and has cash value accumulation inside the policy. You're also able to carry it with you in the event that you leave your employer. Additionally, Dougherty County provides a great benefit to all benefit-eligible employees by paying for $10,000 of term life insurance. And the fourth most vital area to cover is your savings. We want to encourage you to set aside an emergency fund, around 3 months of expense monies that you can access in the event of an emergency. After that, move that to retirement funds. This can usually be done through a savings account, 403bs, IRAs, even credit unions. However you choose, have some type of systematic savings plan where you pay yourself first. Now, let's go on to your other benefits. We're excited to bring you dental health care through a unique plan from Simple. Called direct reimbursement, this plan pays according to a schedule based on dollar amounts, not on procedures. Your dental plan has both a high and low option to choose from. It's simple. The high option will pay 100% of the first $200 of dental expenses. After that, the plan pays 50% of the next $2,600, up to the annual maximum of $1,500 per person per plan year. This option has an orthodontics benefit for both children and adults. Keep in mind, you can use your annual maximum every year for orthodontics. The low option plan will pay 100% of the first $150 of dental expenses. After that, the plan pays 50% of the next $1,200, up to the annual maximum of $750 per person per plan year. This option does not have an orthodontics benefit. Both options, you can choose any licensed provider for your dental care. All procedures are covered except for cosmetic care, such as teeth whitening. Your dental, it's just that simple. Vision care is available through iMed. By seeing a provider that is in the iMed Vision Network, you can receive vision exams, lenses, and frames for a copay. The plan has a standard and a buy-up option to choose from. The standard plan has a $10 exam copay and $20 materials copay. The buy-up option has a $10 exam copay and a $15 materials copay. With both plans, in lieu of glasses, you can get contacts. There are discounts and benefits on numerous other services, like progressive lenses, scratch-resistant coating, and more. Please visit doughtertybenefits.com for more extensive plan information. Without even looking at the statistics, you know that heart attacks and cancer and strokes happen to people every day. Very few people are financially prepared to survive a critical illness. Critical illness insurance provides security for many expenses that may not be covered by medical insurance, such as rent or mortgage, copays and deductibles, family income replacement, and experimental treatment or drugs. Critical illness insurance can provide a substantial lump sum cash benefit that you select upon the diagnosis of a covered condition to help you protect you from the related costs. Some of the covered conditions include invasive cancer, heart attack, stroke, kidney failure, ALS, and major organ transplants. Your benefit can be used any way you and your family choose, and your benefit is paid in full regardless of any other insurance you may have in force. Also, this coverage is portable if you change jobs or retire. Last, if you're looking for some creative ways to save money this year, you may consider having a flexible spending account, or FSA. There are two types of FSAs, health care and dependent care. A health care flexible spending account allows you to put pre-tax dollars into an account to be used to pay for eligible expenses not reimbursed by health insurance plans. Things like deductibles, prescriptions, even LASIK surgery. When you incur those expenses, simply give your FSA credit card to the provider, and that qualifying expense will be paid from your account. A detailed list of these eligible expenses can be found at doughtertybenefits.com. Dependent care FSAs allow out-of-pocket qualifying dependent care expenses, like your kid's licensed daycare, to be eligible for reimbursement if it is for dependents claimed on your federal income tax return. Flexible spending accounts are a way to save on taxes for things you're already paying for. One important point to remember is that up to $500 remaining in your health FSA at the end of the year will roll over to the next year. So the plan is no longer completely use it or lose it. Any dependent care dollars left unclaimed in your account at the end of the plan year are forfeited to your employer under the FSA rules. Information provided in this presentation is a highlight of decisions you should consider for the upcoming plan year. For more detailed information regarding these and other plans, please refer to the plan documents with complete details at doughtertybenefits.com. Well, that wraps it up. Make this a great open enrollment. Again, the simplest place to start is at, you guessed it, doughtertybenefits.com. We appreciate all you do and thank you for spending your valuable time with us.